Hey everyone, Investor back to another video for today. So let's talk about NIO. They reported earnings yesterday before the market opened. The stock crashed about 10% after that, closed the day around minus 7%. Now what actually happened with the company, right? The company was supposed to be the Tesla of China. Well, Tesla is in China and is doing pretty well, so why would you invest in a gimmick of Tesla in China? But regardless, is NIO investable? Yes. Is NIO as investable as Tesla? No. Regardless, let's have a look at the numbers because it is pretty impressive what they managed to do in the last 2 years, right? At the end of 2019, NIO was basically going bankrupt, got saved, and then, well, the story unfolded. Now, let's have a look at the numbers that they gave us for the deliveries back in May. Actually, first, let's have a look at a couple of metrics here, right? Revenues of the last 12 months, $5.69 billion. Free cash flow, negative, and it's trending downwards. And return on equity is well, very, very negative as well, but it is trending upwards. Still very negative though. Then as a price to sales ratio, obviously there's no PE here, but a price to sales ratio is now lower than before at 3.3 times sales, which makes it a bit more investable. Now let's have a look at the numbers from May. So the delivery numbers from May, they say here NIO delivered 7,024 vehicles in May 2022. That's also 25,768 vehicles in the first quarter of 2022. Now for that same period in May, XPeng and Li delivered 10,125 vehicles and 11,496 vehicles respectively. That represented a year-on-year jump of 78% for XPeng and 166% for Li Auto. Now, NIO delivered year-to-date 37,866 vehicles. That's an increase of 11.8% year-over-year. Cumulative deliveries of vehicles as of May 31st, 2022 reached 204,936. So a big milestone for them reaching, well, that number above 200,000. Now we obviously know that in May, the company and many other Chinese companies or companies based in China were impacted by the COVID-19 outbreak. We've seen that with Tesla as well. But as I've just read the numbers for XPeng and Li Auto, they actually managed to grow much faster year over year, and they managed to, well, outdo NIO in that month. Now, before we go and look at the earnings report and see what went wrong there, besides the fact that they actually beat on revenue and, well, lost less money than expected, some other things should worry investors. But first, if you'd like to support this channel, check out the link in the description below to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Also, by the way, we're having a competition on this channel and on stockcard.io. It's free to enter. It's very, very easy to follow the rules. You can get $250 if you win, completely free. Link down in the description and in the pinned comment. All right, so first up we have here quarterly total revenue reach $1.56 billion. Quarterly deliveries, as we said before, for the ES8, ES6, EC6 and the ET7 were 25,768. Here you can actually see the history, let's say, of the deliveries since Q2 2020. So then just over 10,000 vehicles. Fast forward almost 2 years and they're over 25,500 vehicles. All right, now for the other very important numbers here, vehicle sales. For this quarter, it's barely up quarter over quarter, but it's up 24.8% year over year. Now these are obviously not dollars. In dollar terms, that's $1.45 billion. And as for vehicle margin, and that's when things go a bit in the negative, it's 18.1%. That's down 280 basis points quarter over quarter and 310 basis points year over year. So not good, but we'll talk about that in just a bit. Gross profit is also down, gross margin down as well. Now, while most vehicles hiked vehicle prices to offset higher costs, because we all know right now everything costs more. That's also why you see the margins here go down. NIO actually did not, all right? It blamed higher battery costs for the sequential decline in its vehicle margin and lower average selling price because of a change in its product mix. We've seen that with Tesla. Tesla actually, well, prepared quite nicely for whatever is happening right now, and they have the luxury of actually hiking the price of their vehicles because demand is so high. NIO did not do that, and that's why you see a reduction here quarter over quarter and year over year in the margin. And the same goes for net loss and adjusted net loss. It increased significantly year over year. It decreased quarter over quarter though. Now for the next quarter, so the second quarter of 2022, deliveries of vehicles to be between 23,000 and 25,000, which is below what we had this quarter, so Q1. And this will represent an increase of approximately 5 to 14.2% from the same quarter in 2021, but again, a reduction quarter over quarter. Total revenue to be between 1.47 billion and 1.59 billion. Now, this quarter, as we've seen, it was 1.56 billion, so it can beat if it meets its expectations on the upside, but it will or it can most likely miss. But this also represents an increase of approximately 10.6% to 19.4% year over year, but that could mean a reduction quarter over quarter. Now they did say though in the call that for June they expect obviously better delivery numbers than in May, so that's already promising. But to repeat myself, Q2 is obviously a quarter impacted by, well, shutdowns, especially if you're a company that is mainly focused in China, so that's why you see these numbers quarter over quarter decrease. Year over year, it will still increase, but quarter over quarter, you will see decrease. You would like to see what they say for the coming quarters. Obviously, in a month from now, we'll get the delivery numbers for June, so that way you can already assess the situation. But overall, if you're looking for an EV play, to me personally, and then yes, maybe it's because Tesla is my biggest position, but to me personally, you should always go with Tesla. Why wouldn't you, right? If you were looking back in the days for a smartphone play, would you go with, I don't know, Nokia or something like that? Or would you go with the likes of iPhone? Well, Samsung is not in the US stock exchange, but you see what I'm saying here. And second of all, if I'm being frank, if you really don't want to invest in Tesla, you should probably look at Volkswagen because they are probably the second biggest out there when talking about a huge potential in the EV market and every brand that they own in the Volkswagen group. That's just my opinion. Obviously, I do own Tesla and I don't own anything else. But talking purely about NIO here, if you disregard every other company, let's just hypothetically say that, NIO could be a huge success. We've seen that with the numbers. Yes, right now they're still losing money. Yes, still impacted with COVID shutdowns, etc. But overall, the game plan looks to be a successful one. Now, I'm not talking about the battery as a service because I do still think that this is nonsense. The fact that you will just go in a type of garage and you get your battery switched, to me, just doesn't make sense, especially not for the long term. But overall, the whole package deal here, if you have it, then you should be fine for the long term. Obviously, keep on looking at those numbers and hopefully the net loss improves, the margins improve again, because that's extremely important. Obviously, do share your thoughts down in the comments below. Do you hold NIO or any other companies besides Tesla? Leave it all down in the comments below. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next video. Bye.